Like it doesn't break a high or it doesn't break a low.
Yeah.
Is the market
now,
bullish or bearish?
Sorry?
Is the market overall bullish or bearish? So does our structure look like this? Or does our structure look like this?
Let's say it's bullish, but now it doesn't. Yeah, let's say it's bullish, but now it doesn't break the high. Just goes and
It just
ranges
ranging in this range.
Yeah, because now if you're taking the and then you're having the high, and then we're expecting that it's going to break the high because it's in the discount zone, but now it doesn't go over the premium zone. That goes into premium and then comes back.
Yeah, so essentially, remember, that's usually why our take profit is usually at the high or at the low, right? And now tonight you'll also get a understanding as to like even just a bit before the high, like where there's imbalance or where there could be potentially a reversal point in the market, like a minor structure shift, then you can get out at that zone, okay? But essentially, if the market isn't breaking this high, it's either doing one of two things, okay? It's either generating liquidity, which is most likely what they do, okay? They're generating liquidity. So this is what we call like another accumulation phase, okay? So remember when we touched on supply and demand, did you guys do supply and demand with me? Or did you do it with Marco?
No, we did it.
I think we did it with you.
We did it with Marco.
With Marco?
We did it with you.
With
we
me,
did it
right?
with you, and then you sent
Okay, cool. So remember we spoke about accumulation in order to advance or distribution in order to decline, right? So the market is doing one of two things when it's ranging, okay? Number one, remember the point of a range, okay? When they create a range, the point of a range is to create confusion, okay? It's to create confusion between buyers and sellers. So its point is to get buyers and sellers involved in order to then liquidate maybe both of them or one of them that's on the wrong side of the trade, okay? So essentially, if you're in buys over here and your high is not being broken, that you want to be scalping that range, okay? You want to be in here and you want to be out, okay? Until the market then has enough momentum to break higher, okay? That's number one. Or what could be happening is, let me do it like this. What could be happening, now this is what I was trying to explain to everybody today in terms of inducement, right? Now remember, when there's liquidity that's been built up, let's do it like this, right? So the liquidity is being built up, and essentially there's liquidity laying below these lows and above these highs, okay? So there's liquidity on both sides, but our overall structure right here is still bullish. So we don't want to be involved in this cat and mouse game, okay? Especially if we're involved here and then it still fails to take up the high, okay? We don't want to be involved in that because they're generating liquidity on both sides, all for them to most likely liquidate and then liquidate, okay? So the highest probability setups are going to sit by your swing points, right? The highest probabilities are going to sit, setups are going to sit at your swing points, okay? And this is where you're going to outweigh the traders that are getting involved in the small little structure shifts, okay? The small structure shifts, guys, are only for your entries. But remember, bear in mind, they're for your entries at the right point of interest, okay? If you're getting involved over here and we're struggling to break highs, don't try and hold your buy position if you see the market starting to show you a shift that it's coming lower. Rather scalp it and then be out, because what's next is for them to liquidate that, come to the real point of interest, and that's where you could either look for your smaller time frame, changes of character, or like I said to somebody, it depends. Earlier in the group, somebody asked me with regards to confirmation entries, right? You can look for confirmation entry here, but we are already bullish. So it is okay to get a risk entry here. okay? But it's a risk entry at a high probability zone, and it's in alignment with a confirmation that we are bullish. Okay, so that's the only time that you take a risk entry, is if you are at a point where, firstly, you can afford to put your stop loss below the low, and you can afford to hold that risk. Otherwise, you have to scale in, and you have to look for this option rather. Okay, so there's two options: confirmation or risk. Risk entry only within a confirmation of us breaking structure to the upside. And if the market is ranging, you want to be looking to get involved in the liquidation of that range in order to catch the continuation to the upside. Does that make sense?
Yeah.
Yes, it does.
Okay, does that answer your question? Sorry, I don't know who it was who asked me that question with regards
Yeah,
to, does it answer your question?
yeah. Even with the thing, with the Sasha, when I was yeah, I get
With
it now.
regards to, you get it now. Okay, cool.
Because
Nice.
I was the one who asked you about Sasha, saying when I back test, I see that it doesn't break structure on the 2023.
Yes, then the 32, yes. Okay, you were the one asking me that. Okay, cool, Selo. So now you get it, right? If the market is bullish overall, if the order flow that's being presented is bullish, right? Then essentially you can take a risk entry at a respect of a low around your Sasha zone. But the time that you want to look for your confirmation entry is always if you need to look for a reversal. And then secondly, if the market, your stop loss is too big, so you need to make your stop loss smaller. And in other words, that's called now scaling in. Okay, cool. Any other last questions? Let me just see. Ali, please may you show us how to analyze from higher time frame, please. I'm struggling. Okay, don't worry, we'll get into that tonight.
I want to ask.
Sure.
I want to ask you something quickly. I want to ask you something.
Okay.
I'm a bit confusing between a break of structure and a change of character. Can you please like show me, especially on a bearish market?
Okay, so just remember, a break of structure just means that the range has been broken. Okay, it doesn't matter which direction. So let's say, for example, the market's bearish. Okay, this all over here, let's mark it like this. This was our trading range. Okay, and then the market broke structure, right? So this is what we call major break of structure. Why is it major? Because it's breaking the major range. It's breaking the external range. Okay, so now we have a new trading range. And we now have, again, a major break of structure. Okay, and now the market does this. What do we call this? What do we call this?
Church.
Not Chuck.
No, that's a break of structure.
Break of structure, what kind?
Fractal.
Say again?
Fractal.
Fractal. Okay, so in other words, this is a minor break of structure. Okay, so this is what we would indicate with a baby M, minor break of structure. Okay, so this is major because it's breaking our external range, like I explained. But can you see this is minor? It's internal of our range. Okay, now only if we have the trend, let's say, for example, so we have a minor break of structure and then we finally break this major break of structure, right? So now we have another major break of structure. Okay. Now, what in a bearish trend, what are we expecting to form before a new, let's do it like this because this will be our swing high, right? What are we expecting to form before a new low gets formed? What are we expecting to form here?
Lower high.
Lower high, right? So we're expecting a lower high to make a lower low. Now, the only time that the shift happens is when the market takes out the high. And that will now be our change of character. Okay, why? Because now the market didn't make a lower high, it made a higher high. So now it's showing us the market structure has shifted from bearish to now bullish. Okay, so now after this has happened, we've got a major break of structure to the top side, okay, which is otherwise known as our chalk in this way, in this instance, because it has broken major structure to the top side. And because the trend has been broken, we now have a change of character. So now we're expecting the market to form a higher low and then a higher high. Does that make sense?
Yes, you are making sense.
Okay, I'll save this for you just to keep it as a note, and I will post it on the group.
Sorry,
Okay.
Ali.
Yes.
Can you please
Any
wait?
Sorry, go for it.
Where can you press the fab? Are you putting at the, you know, where there's a change of character
Yes.
to the last low here? It's where you will start, ne?
Yeah, so this is now going to be where you start looking for trades. Now, remember, what we spoke about before is also very important. There's something called our change of character, and then we also have a change of character followed by a break of structure. Okay, now if a change of character is followed by another break of structure, okay, this is called a confirmed chop. Okay, that means that by this breaking this high again, okay, it's showing us that this push to the upside wasn't just to come grab some liquidity from up top here and then continue taking out the low, okay, because that is what inducement is. Okay, so by breaking the structure again, it's showing us that it's confirmed that the bulls are in control. This is what we call a successful retrace. Okay, this is called a, let me put it like this. Once the market breaks the structure again, this is what we call a successful retrace. Okay, why? Because we've had success at pulling back and continuing in that direction. Okay, now when you're looking for your trade, remember we speak of swing points and we speak of fractal. Okay, so now obviously this is going to have been a new range that got formed. However, what's sitting below this low? What's sitting? The liquidity, right?
Liquidity.
Exactly. Okay, so there's liquidity laying here. Okay, and that means that the market can do one of two things. The market, if the market has enough liquidity, it can pull back and continue, or it can just liquidate that low and continue. Okay, and what this will look like, it will just have maybe a body, and then this liquidation will be a wick, and then the market will continue in that direction. Okay, so you've always got to now understand, and you'll understand a bit better after what we get into tonight, okay? But you'll understand, is there liquidity laying below that low, or has that liquidity been basically taken already, or is there no liquidity laying there, and that's why this low gets respected? Okay, so liquidity that can be laying below this low could be something like an unmitigated order block. It could be imbalance, which we're going to get into today, and it could be untested order flow. Okay, so we're going to get all into this tonight, but structurally, does this make sense?
Sorry, Ali.
Yes.
I'm still confused with one thing that I want to be sure of. Can you please go to your left? By the somewhere that minor break of structure. I wanted to would you call that inducement if you look at that thing, that small fracture structure, the change of character to the upside?
Yeah, because remember, this isn't a change of character, right? How is this a change of character? Because what is this? Also a minor breakup structure. Do you see? So a lot of you are getting confused by seeing the market coming down, and then you see this, and you're calling this your change of character. It's not the high that created the lowest point in the market. This is the high that created the lowest point in the market. So in order for it to be a valid change of character, it needs to take out that high in order for it to change character.
Oh, so sorry, Ali.
Does that make sense?
Yes. Sorry, Ali. Can I ask one more thing about this?
Yes.
So since it's as you say, it's not a proper change of character. You told us once before, if the change of character is not alignment with our higher time frame or major structure, then it's probably inducement. So would you call that inducement?
Exactly. Yes. So let's say, for example, right? Let's say, for example, okay, now everybody's with me up to this point, I hope. Okay. So now inducement is basically if there is liquidity laying above or below a low, and you are trying to get involved off of the respect of that high or respect of that low. Okay, so in other words, if the market created, let's go bullish scenario. Okay, if the market now started to create something like this. Okay, now we've got our breakup structure, our major breakup structure to the top side. Okay, so now the market comes down. Okay, and all of a sudden, the market comes back up. Right, who's looking to sell here? Who's looking to sell here?
Me.
Honestly, I would.
Yeah.
Okay, so this is what you now need to start. This is what you now need to start understanding is because the more that you train your eye and the more that you remember, guys, when you approach the market, you must approach it with logic. Okay, you must approach it with the mindset of logic. Does it make sense for me to now sell here when the market is bullish overall? Okay, because what's going to happen here is inducement. Okay, because this is what it's going to look like. Okay, because this is our range. This is our range. So what did this change of character bring?
Discount.
Price into discount.
Exactly. So in other words, this change of character is just coming to collect liquidity in order to continue with the trend. Okay. So how do we not get caught out by this? You ask yourself the question that I'm telling you now. Did this change of character just bring discount of my bigger range? Or did this change of character actually take out a significant low? Okay, which one is significant? Which one is significant? This one. That's the significant low. That's the important low. Okay. If the market takes out that low, the one that started the movement of this break of structure to the upside, then you can gladly look for sales. Okay. But if it didn't, and you're just looking at the 5 minutes or the 1 minute time frame, and then the 1 minute's giving you this change of character, and especially what it likes to do, guys, is it likes to come into discount straight away. It doesn't even give you the pullback, okay? Because this is where you can counter trend trade. I don't advise it, especially if you're still not profitable, okay? Rather just stick with the trend. But sometimes what the market can do is it can give you the pullback straight away. So you can catch a counter trend trade, but you must know to be out at discount before it goes up again. Is it making sense, guys? Are you with me?
Yes, thank you so much, Ellie.
It's a pleasure, no stress.
Ali,
Okay. Yes, yeah, you have a question.
yeah, and then similar to this. So
Okay.
basically, you know how Nasdaq had a bullish run like today and last night,
Yes.
and then like if it was pushing down yesterday, right, on a sell, and then like how do we know that it was going to push up even though there was no change of character? Because it went all the way down and then it just went straight up. And then if you were in your ranges.
Yeah, let me show you. Okay, cool. So, and this is what I've been saying. I think I was speaking with you guys because I was telling everybody was getting induced into cells. Everybody was getting induced into cells today. And I said, be careful of the liquidity, guys. There's still got lots of buy side liquidity. So all of this right here is liquidity laying here. Okay, well, this one has been taken, but this is liquidity. And this is liquidity that's still sitting there. Okay, there's still buy side liquidity. Okay, so essentially you need to look at the higher time frame to understand what your market structure is doing. Okay, because everybody's been looking to get involved in cells here. Okay, now I want you to understand something. The market can decide to sell here. Okay, I'm not saying it can't. Okay, at the end of the day, if the market has enough liquidity from just grabbing above these highs, okay, if the market has enough liquidity, it will come down. Okay, but what will confirm that it will come down is if a significant low gets taken out, and then we look to catch the sell, guys. Don't try and catch the sell on the tip of the turning point. Okay, because most of the time when you're trying to catch it on the tip of the turning point, when the market is so bullish right now, okay, you're going to get induced. That is what the market is trying to do. Okay, so if we look at this on a smaller time frame, now let's go to 4 and 1 hour. Okay, if we look at where was yesterday's move, right? Okay. So now you're asking me, how did this buy happen? Am I right?
Yes.
Okay. So where was our trading range? Low and our high. Where was our inducement? And then what did the market do? Came just below that low and then decided to buy.
Can we start from yesterday, please?
From yesterday. Yeah, this is yesterday, isn't it, guys? Yesterday at 9 o'clock.
Yeah, it is.
Yeah, this was yesterday's move.
Oh, sorry, I see you on a high time frame.
No stress. Okay, so let me just explain that again before we jump forward. Okay, so exactly the diagram that I just showed you guys. Okay, so let's go back to this diagram. Let's go back here. Okay, so remember, what did I say? If there's liquidity laying below a low, okay, but our range is still this low and this high, remember, internally, this is minor structure now. This is our swing low and our swing high. So now sitting below the low is liquidity. So now we go back and we look at exactly what happened yesterday. Okay. Did this low, who was trying to buy at this low? Let's be honest. Who was trying to buy at this low? Okay. So now tell me, okay, so tell me, you as well. Okay, it's cool. So we learn, right? So tell me, what was your confluence to buy at this low? Did this low break any structure?
No.
There we go. So there's your answer. So if you ever look to buy at a low or sell at a high ever again that didn't break structure, then you know that you are being induced. That is the act of inducement. Okay, so if we go to a smaller time frame and we look at this, you're going to see how they induce the buyers. Here was the inducement. Okay, let's take this big one away now. Here was the inducement. Okay, buying at the low. Another one, buying at the low, and then liquidated in order to actually buy. Okay, so that is the act of inducement. A false idea of thinking, sorry, let me just mute everyone, guys. There we go. Okay, a false idea that the market is having a reaction at that low and then it might continue to the upside. But what tells us that this low is going to hold? What tells us that this low is going to hold? Nothing. It didn't break this high. It didn't have enough strength. So obviously, if the market doesn't have enough strength to break this high, okay, it tried to, but it didn't have enough strength. So if it didn't have enough strength, what does it need? What does it need in order to break high?
Liquidity.
Okay, so now we're thinking about it logically. The market comes, grabs liquidity below the low, and basically taps into, let's see, what does it tap into here on a smaller time frame? Let's go maybe 30 minutes. Okay, we're still going to get into it. I don't want to confuse anybody now. Okay, we're still going to get into it. Yeah, 1 hour was the clearest, to be honest. Okay, but basically it told us it needs liquidity. Okay, it needs liquidity. It's coming to collect liquidity, and that is what's now going to push the market higher. So now, does it make sense to be looking for sells?
No.
No, because it's just grabbed liquidity and this range has been respected. So remember, back to market structure. If the market respects lows, what do we expect it to do?
Has to break highs.
Take
Take
out
out
the high.
highs.
Take out
Oh,
okay,
wow.
you
So,
with
and
me?
I see now.
You're seeing it now.
My
Okay,
mistake was counter trading, counter trade trending.
trend
Yeah.
trading, yeah, counter trend
Yeah.
trading, no stress. So sometimes, guys, don't get me wrong, not every day is going to be in alignment with the higher time frame trend. Okay, but that's why also sometimes not every day is a trading day. And the problem is now you guys understand how